So morning everyone, and welcome to the Spring Statement R&D Debrief webinar by Empowered. So we tend to do these twice a year, so shortly after every statement, so the Spring Statement and the Autumn Statement. Some of these are fairly material, some not so, but this is definitely one of the more material ones with many updates and changes to the R&D scheme recently. In this webinar, we'll try and give some more information on those previously announced changes in the autumn statement, where some further clarification has been given, as well as some of those new changes that were announced last week, and some more clarification around future proposed changes that are on our radar too for the future. So we'll try and outline and provide more detail on all of these to help you understand what they mean for your companies more specifically. Just for housekeeping purposes, we'll try and keep this under or in and around 45 minutes. And we'll also include a Q&A or an interactive Q&A towards the end. Please do ask questions throughout. I think you can do this in the chat function in Zoom. We probably won't answer them in the webinar just to help the general flow, but we'll answer them at the end. If they are, and we'll answer the more general ones, but if they're very company specific, we'll probably wait until the end or even take them offline to answer them rather than on a public forum. It's also recorded, so if you do need to jump off, it's not a problem. We will be sharing the recording shortly after the webinar for you to have on demand. So just some intros before we do get into the heavy detail of the update. So starting with Empowered, the company. So we're an R&D tax advisor and been operating now for around 6 years. We combine technology and R&D specialists to provide you with an enhanced R&D claiming experience. We work with over 1,000 companies now and have successfully claimed back hundreds of millions in R&D tax relief. The people on the call, so I'm Max, Chief Customer Officer at Empowered. I oversee the whole client and claim delivery team here at Empowered, which is a multidisciplinary team with client success managers who manage the clients from start to end in the process, so from onboarding all the way through to successful payouts. The team also has tax accountants, R&D specialists, and technical narrative drafters. There's also John, who you can probably see on your screen, who's head of tax. I'll let you introduce yourself.
Yeah, sure. Thanks, Max. I'll say hello. So good morning, everyone. So yeah, I'm Jonathan Yeomans. I'm the head of tax at Empowered. In another life, I worked at HMRC for just over 30 years. Around 22 years ago, I was a tax inspector working on some of the very first R&D inquiries at HMRC. And when I left HMRC in 2020, I was a national project board lead for corporation tax inquiries, leading a team of tax inspectors who were looking for R&D errors in company tax returns. So nice to meet you all.
Thanks, John. So then we'll give a brief outline as to what we'll go through in the webinar. So a quick recap on the R&D schemes. This is by no means an educational R&D educational webinar, but it's important to set the context for some of the things we'll speak about later. We'll talk through some of the previously announced rate changes that were announced in autumn, and they're coming into effect from the 1st of April 2023, so in just over a week's time, actually. Then some of the new announcements that were announced last week. Some of the previously announced scheme changes. So you've got difference between scheme changes and rate changes. Rate changes are around the calculation. Scheme changes are around, well, the scheme, what can be included, what's excluded, and also how you make a claim. And then the anticipated timeline for some of these current changes, but also some future proposed changes as well. And then the Q&A, as I mentioned at the end. So for you, John, on the R&D scheme?
Yeah. So I like to start these webinars with a very brief recap on what is R&D for tax purposes. As Max said, this isn't going to be an R&D training session. We've got other resources available for that, but it's useful, I think, just to make sure that we're all clear on the definition, and we'll talk about some of the terms that we're going to be referring to later on in the webinar. So what we've got there in the blue box is HMRC's one of their main definitions for R&D for tax purposes. So R&D arises when a business seeking a scientific or technological advance faces and tries to overcome scientific or technological uncertainties through methodical experimentation conducted by a competent professional. So essentially what we've got there are three pillars that are essential for having a qualifying and successful R&D claim. So you've got to have an advance in a qualifying field of science and technology, and that needs to be an advance from the perspective of the wider worldwide field in that area, not just an advance for the company. So the first pillar is the advance. The second pillar is there's got to be some scientific or technological uncertainties that you're seeking to overcome in order to achieve that advance. So there needs to be some uncertainties. And then the third real pillar is the fact that there's got to be some period of experimentation or problem solving that you need to go through in order to overcome those uncertainties. So it can't be something that's straightforward. It can't be a simple journey from A to B. So the third pillar is the experimentation. This is all overseen through the lens of a competent professional, which is also another key element. So yeah, that's useful, I think, just to précis what is qualifying under the R&D scheme. And then at the bottom of the slide there, you'll see that the R&D scheme is essentially split into two separate schemes. There's an SME scheme for small and medium-sized enterprises, and then there's an RDEC scheme, which is for large companies. And they both have the same definition of R&D, but they apply the relief in different ways. There's different rates that are used to apply the relief. And the difference between an SME and a large company, I'm sure many of you know, but for the benefit of those who don't, an SME is a company that has less than 500 employees and a turnover of under 100 million euros or gross assets not exceeding 86 million euros on a balance sheet. So if a company has more than 500 employees, or they're part of a group that in total has more than 500 employees, then they will be deemed to be large, and so they'd fall under the RDEC scheme. So I think it's important just to crystallize those two terms because we will be talking about that later on. Okay, let's move on to some of the previously announced rate changes. So as Max said, we had the autumn statement last year, and we gave a webinar about that shortly afterwards. The spring budget last week reaffirmed some of the rate changes that were announced at the end of last year in terms of the R&D scheme, and these are summarised on this slide. So the SME R&D enhancement rate, currently 130%, from the 1st of April 2023, so just over a week's time, that will be reducing to 86%. The tax credit rate that SMEs claim, so this is the amount that you claim for relieving your losses into a tax credit, that will reduce from 14.5% to 10%, again, for expenditure incurred on or after the 1st of April 2023. So quite dramatic reductions in those two rates for SMEs. Conversely, the RDEC rate for large companies going in the opposite direction. So from the 1st of April 2023, that's going to be increasing from 13% to 20%. So that's what was announced in the autumn. It was reaffirmed last week in the budget. These are quite significant changes to the R&D scheme relief. But if we move on to the next slide, so this is still dealing with what we had last year. So this is a summary of the impact of these changes on a company claiming under the R&D scheme. So you can see that on £100,000 worth of R&D expenditure, a profitable company can currently get relief that equates to 24.7% when you extrapolate the net benefit by reference to the percentages that are used. That's going to reduce to 21.5% net benefit from April. It's nearly a 13% reduction. For a loss-making SME claiming a tax credit, it can currently get 33.35% back on every pound spent on R&D. That's going to reduce significantly to 18.6% from April 2023. So that's a dramatic drop of just over 44% in relative terms. Whereas for the RDEC rate for companies, that's increasing from a net benefit of 10.53% to a net benefit of 15% after corporation tax is applied. So that's an increase of over 42%. So you can see on this slide the impact of those rate changes in terms of the bottom line on a company's R&D claim. If we move on to the next slide, so we had a new announcement last week in the spring budget, a new rate of relief to potentially soften the blow for those R&D intensive companies, so to help counteract the impact of those rate changes. So this is a rate that applies to what will be termed a new class of company, an R&D intensive SME. So these are companies who are spending more than 40% of their total expenditure on R&D expenditure. So lots of groups have been lobbying for a higher rate of relief for those UK companies that are in the artificial intelligence sectors, fintech sectors, agri-tech, those cutting edge UK businesses who are R&D intensive. The Chancellor's listened to those representations and has introduced a higher rate of relief for those kind of companies, but it's not sector specific. It'll help those cutting edge UK companies, but it's available to any company that's spending more than 40% of their total expenditure on R&D. And it means that those companies can retain the 14.5% tax credit relief percentage that most SMEs are going to be losing from the 1st of April, and it equates to a net benefit of 27%. So those companies spending £100 on R&D, they will get a tax credit back of £27. It only applies to loss-making SMEs, so it only applies to SMEs. And when we come to calculate the 40% expenditure figure, it includes all group company or relevant group company expenditure as well, is included in the total expenditure figure, and then the company has to determine what element of that expenditure is being included in an R&D tax relief claim, and if that is above 40%, then they are treated as an R&D intensive company. So it was big news, and it's a good recognition of the fact that these companies will be hit severely by the R&D rate changes, and they're going to get an extra 8.4% effective from the 1st of April. And I guess one other thing to say on this, Max, is although it's effective from the 1st of April, I think a measure of the fact that how quickly this has been rushed in by the Chancellor is the fact that this won't actually be included in the Finance Act that's being published this week. Companies will start to accrue the relief from the 1st of April 2023, but they won't actually be able to claim the relief until this is included in a future Finance Act after a future fiscal statement, probably the autumn statement this year. So it will be some period of time before companies can actually claim it. But big news and something that we'd hoped to hear in the budget, and welcome news.
It's been a bit of yo-yoing, hasn't there? So currently these companies can claim up to 33%. 2 weeks ago it was down to 18.6. Now it's somewhere roughly in the middle to 27. So yeah, fairly happy medium in the end.
Yeah, not quite as big an impact as we feared. The next big news in the spring statement, spring budget last week, was the fact that the overseas expenditure restriction that was due to come in from the 1st of April. So this was a restriction that would stop companies undertaking R&D outside of the UK from claiming relief on those expenditures in most circumstances, not in all. But the big news was those proposals are being delayed by 12 months. So this was a massive relief to those companies who've historically set up their operations to conduct R&D outside of the UK for whatever reason. And this delay of at least 12 months means that nothing will change for those companies. They'll continue to claim tax relief under the current relief provisions. And they have a further 12 months to consider restructuring their business operations if they so desire. to bring some of that R&D activity back onto UK shore. And it's good news as far as we're concerned. It's something that we've been calling for in our consultation submissions, in our submission to the House of Lords at the end of last year. And we were actually mentioned as pushing for a delay on this piece of legislation in the House of Lords report that was published at the end of Jan. So yeah, good news here.
Nice. It's not a blanket approach, is it? So if any R&D expenditure is overseas, it's excluded. I think there are some exemptions, aren't they? But they're quite niche.
Yeah, you're right. So when this was muted last year, we had some guidance published, and I guess the most detailed guidance was in the draft guidance that was published by HMRC on the 20th of December. And that included some certain exemptions that companies would potentially still be able to claim for overseas subcontractors' EPW costs. That's if there were reasons such as geography, environment, or other legal conditions that meant that you had to conduct your R&D outside of the UK. For example, for legal reasons, if you're a pharmaceutical company attempting to launch a drug in the USA, the FDA in America requires that you've got to conduct your clinical trials on US soil. So you couldn't physically conduct that R&D in the UK. So in those circumstances, the government were going to allow you to claim an exemption from the stop on those kind of reliefs being allowable. Those exemptions will probably still be within the legislation if and when it's introduced, probably from April 2024. However, because of the delay, they may expand those exemptions, revisit those exemptions. I guess we'll have to wait to see when the new legislation for this is published, which they've said will be in the summer, and it will also be accompanied by a new consultation. So you're right, Max. Yeah, there's potentially some exemptions that allowed companies in some circumstances to continue to claim. Those will probably still be available from April 2024. But the fact that companies have got more time to plan, I think, is welcome, because this was potentially going to be rushed in quite quickly. Didn't give companies time to restructure to accommodate what would have been a very significant change for some companies.
Mm-hmm. So you've gone through some of the previously announced rate changes, the new changes. There are some previously announced scheme changes. So these are around, like the inclusion, exclusion of costs and activities, and also the way you actually make a R&D claim. So this has been a long time in the works, i.e. the inclusion of pure mathematics, cloud computing, and data costs. And this is actually confirmed to go ahead. It's not being delayed like the overseas R&D expenditure. So this will benefit many companies, probably primarily companies who do more software-based R&D claims. In reality, this really does show that HMRC are trying to keep up with the pace and just acknowledging that a lot of R&D in today's world is happening in the cloud, and there's a lot of data-heavy research and development going on out there. You see in the SME rates dropping relative to where they are today. This, which is for many companies a negative piece of news, but this inclusion of additional costs should be seen as a positive, where they're expanding the scope of qualifying costs, cloud computing and data, but also qualifying activities such as pure mathematics, say offsetting part of that loss for the SME group of companies. There's been more information around some of the previously announced changes, more on the abuse of the scheme that's been highlighted, I think mainly in the autumn statement. If you want to go through that, John. Yeah,
sure. So there are various new measures coming in over the next 12 months to help HMRC combat abuse of the R&D scheme. One of the requirements that's coming in is a requirement for all R&D claims to be submitted digitally and to be accompanied by an additional information form or some additional information. It's not currently mandatory for claims to be accompanied by additional information, so this will give HMRC more data which they can risk assess to identify those riskier and non-eligible R&D claims. And We know that HMRC have had more resources made available to them over the last 12 months to help with compliance activities. They've had 100 extra tax inspectors who've come online in the last 18 months, specifically working on incentives and reliefs and R&D reliefs. And everybody in the R&D market has seen a result of that feeding through into increased compliance activity around R&D claims, which is not necessarily a bad thing. We want the money that the government intends the recipients that they intend to receive the right money. So there's a lot more policing of the R&D scheme currently being undertaken, and I guess that will continue, and that was reaffirmed in the budget. And this whole issue around the additional information requirements that I think we're going to talk about later on is key to that. Also, HMRC, since the autumn statement, have had some criticism from the House of Lords in their report and the National Audit Office in terms of perceived under-policing of the R&D scheme historically, I guess. So that is feeding through to a change of approach by HMRC, and we've seen the launch of one-to-many campaigns, letter campaigns, and various compliance campaigns by various departments within HMRC, and we've now seen departments such as ISBC and WMBC within HMRC handling inquiries. So there's more compliance activity certainly being undertaken in HMRC, and some of that has been covered over the last few months in publications that have been issued. So yeah, we'll see that level of compliance activity continue for the foreseeable future, I would imagine. And then I guess neatly leading on from that is the additional information form that I just mentioned. So this was talked about in the spring budget last week. So there's a requirement for companies to provide, or claimant companies to provide, more information with an R&D claim. This is in the Finance Act that's being published this week. The way that HMRC wants that information to be delivered is via a new form that they're introducing. That's a G form, or government form. HMRC has two types of forms: I forms and G forms, and this is going to be on a new G form specifically for R&D. And originally, this was due to come in for claims for accounting periods beginning on or after the 1st of April 2023. So potentially for periods ending sometime in 2024. So it wouldn't have really been mandatory for all companies until probably the latter part of 2024. They've actually brought forward the date by which this will be mandatory for all R&D claim submissions to the 1st of August 2023. Yeah, just a few months away, really. And this will be asking for all R&D claims to be accompanied by certain specific details that are not routinely being provided to HMRC in all claims. I mean, it's probably worth mentioning that as a responsible advisor, we've always provided a detailed R&D report with any submissions to HMRC that includes most of the information that will be required on the additional information form. But there are some new things that no advisors were providing previously that are now being required, such as a breakdown of expenditure between qualifying indirect activities, which is the third bullet point there, such as contact details of a specific representative at the company who will be effectively responsible for the R&D claim, and somebody that HMRC will potentially contact at the company if they've got any questions, and also a clear articulation of any agent who's been involved in helping to prepare the R&D claim, and contact details for the agent. So those bits of information will potentially be new for many R&D claim submissions to HMRC. I think it's worth saying that there's a lot more information than this on the additional information form. We've just pulled out the things that are potentially not routinely being provided to HMRC. So you've got those 3 bullet points at the top. Then the actual R&D narrative, the write-up, is going to be focused in 5 specific headings, 5 specific long-form questions that we've listed on the PowerPoint there for you to see. And again, that generally aligns with the information that we're currently providing HMRC, but it's perhaps going to be provided in a slightly different order with a slightly different focus, and this will be completely new to some claimants as well. So you can see the 5 areas that information or detailed information is going to be required. What is the field of science and technology that the advance is taking place in? Not necessarily the field that the company operates in, but where's the advance sit? What's the baseline that you're hoping to go above? What is the advance? What were the uncertainties? And how did you overcome those certainties? What was the methodology that you used? It ties back to that definition that we talked about right at the beginning. So it'll give HMRC a lot more information in a clearer format that they can more easily risk assess, I guess, to find out the riskier cases. A couple of things at the bottom of that slide, a couple of probably new things for most people. This additional information form will be requiring externally provided worker information to be specific to each project, so numbers of EPWs per project, and something that is new and not routinely provided. They will want a pay-as-you-earn scheme reference number for each of those EPWs. So potential additional admin burden there for companies if they haven't immediately got that pay-as-you-earn reference number to hand. But HMRC would expect in every EPW relationship there should be an intermediary somewhere responsible for collecting pay-as-you-earn on the end workers, on the end EPWs. And they want to collect that information, and if it's not available, then presumably they'll want to know why and ask questions about the pay-as-you-earn. So we are aligning our claims to ensure that all of that information is provided. So any customers of us shouldn't have any issues when we come to August, making sure that all of this information is provided. But a potential additional administration burden for some claimants, but all tied up in the combating of abuse initiatives that HMRC have been working on over the last few months.
Mm-hmm. Yeah, it's quite a big change, isn't it, to the way of claiming. I think it's worth noting this. I think there's still some uncertainty around the administration of it and how you actually put this information into the G form. I believe we're getting more information on that soon. So yeah, they're not giving us much time, or even claimants much time, but yeah, we should be able to have it in place by the 1st of August quite comfortably when that information is announced. Another longer term announcement beyond the way of claiming is actually quite a big potential change is the merging of the 2 schemes. So the SME and RDEC scheme, you've seen there's lots of changes, probably, yeah, the SME scheme generally going down, the rates are going down, and the RDEC scheme becoming more beneficial. So the direction of travel has been probably, if you read between the lines, going in this direction for a long time, with even the merging of the rates. You see lots of changes happening. The schemes are becoming very complex to make a claim, even manage the claiming process for everyone involved, whether it's the claimant, the advisor, HMRC. So yeah, this change it's not certain to go through, but there is probably a good chance of it happening. It's currently in draft legislation at the moment, and I believe more information will come out in the summer about it alongside the finance bill. But if it was to come into place, what would it mean? Well, currently, not massive change for the current RDEC scheme because they'll be merged into probably one scheme, but currently the SME scheme would change quite a bit. So the SME scheme is calculated really off 2 main principles, so the total qualifying spend, but also the accounting or the financial position of the company, so whether it's profitable or loss-making, and that determines the type of benefit you get. This change would mean really a flat rate of relief based on the qualifying expenditure that's identified. So in some way ignores the company's financial position to some extent, and it's likely that if this was to come into place, it could come in as early as April 2024. There's probably quite a lot of plumbing behind the scenes within HMRC to do that, so it could well be delayed in line with things like the overseas expenditure, claiming, etc. But yeah, is there anything else you want to add, John? Because I know you've been directly involved in some of the consultation responses to this that are ongoing at the moment.
Yeah, we so we fed back on the consultation, specifically looking at this 2 days before the spring budget. So not enough time, obviously, for the Chancellor to really consider all the responses that would have landed on his desk in the 48 hours before the budget. And that's probably part of the reason why there was nothing firm announced in the spring budget. And the government has said that they still haven't made their mind up in the documentation that's been published. They have expressed an aspiration to want to do this by April 2024, as you've said. I personally think that that's probably too ambitious with all the other detail that needs to be sorted out around such a change as this. My gut is telling me that it's probably likely to be April 2025 or later. But I guess we'll wait and see. We'll get more details in the summer. So yeah, we'll get a consultation on this probably in July, a further consultation, and we'll obviously be working with our customers to submit a response to HMRC and HM Treasury as well.
Mm-hmm. So yeah, lots of change already, potentially even more change in the next year or so as well. So I think that hopefully it's going to be quite useful just mapping this out on a bit of a timeline, where some of these key changes could and will happen. If you want to walk through that, John.
Yeah, sure. So start with that green one. So March 2023, where we are now. So we had the spring budget very recently, and today, in fact, we should get the spring finance bill published on the parliamentary website. I think it's there. I think it was there just before I logged on. Not had a chance to go through it all just yet. But that will go through a few rounds in Parliament before it's finalised, at which point we'll most likely get some detailed HMRC guidance published as well, that will give us more detail to allow us to interpret how that legislation should be applied in practical terms on a case-by-case basis. So that's already in motion. So we're there. We've then got the R&D rates will come into effect from the 1st of April 2023 for expenditure incurred on or after the 1st of April 2023. If you have an accounting period that straddles that date, then you will need to perform an apportionment calculation. If you're a customer of ours, we'll help you with that calculation via our platform. Then we go to July 2023, which is when we're likely to have what's called Legislation Day. I think it was the 20th of July last year. It'll maybe the 23rd this year or sometime around that date. When we'll get the draft legislation, the changes that they potentially want to make from April 2024 published for consultation, and we'll also get a consultation at that time. So that's the scheme merger outline and the overseas expenditure details. So that'll be an important milestone for everybody. Then we'll have the autumn statement or budget later on this year, probably November. Sometime after that, we'll then get the finance bill for 2024 published. And really that point is when companies who are R&D intensive can start claiming the additional relief. So that will probably be later on this year, could be early next year. They've said it will be after a future fiscal event. So potentially we'll have another spring statement or spring budget next year as well. So we're hoping it'll be after the autumn statement. And then April 2024, I guess it's all change again. So we've probably got those R&D overseas restrictions coming in. We may have a merged scheme by that date. Personally, I think that's a bit ambitious, but I guess what we will have by that date is probably a bit of certainty as to what the timeline is for any merge scheme. So by that time, and by the time of next year's spring budget, they probably would have published an outline of how and when any merge scheme will be coming in. So if that's April 2024, if that's April 2025, if that still needs tinkering, at least we should know by this time next year. So yeah, still a lot going on over the next 12, 13 months there, Max.
No, thanks, John. Yeah, now we'll leave a little bit of time to answer some of those questions. A few have come in, I think mainly around the changes last week. So this R&D intensive change, which isn't straightforward, to be honest. So yeah, understandable with the questions. I think the first one is, can you clarify what total expenditure is? Does it include capital expenditure? So I think just for context, so to be an R&D intensive SME, you have to spend, or at least 40% of your total expenditure needs to be qualifying activity. So I think it's referring to that. So what is total expenditure?
Yeah, good question. So as you say, it's 40%. So to work out the 40% threshold, you look at the company's total expenditure in their profit and loss account, the PLL account. And if they're a group company, if they've got connected companies, you also add in their expenditure. So that will give you a total expenditure figure. And then you look at how much of that expenditure is being claimed in the R&D claim of the company that thinks it is R&D intensive. And if the amount of expenditure in the R&D claim is more or less than 40%, that determines if they're R&D intensive. So if it's more than 40%, obviously they're R&D intensive. Can it include capital expenditure? So normally an R&D claim can't include capital expenditure. The only circumstances when an R&D claim can include capital expenditure is if it is intangible fixed asset expenditure that has been capitalized. So usually software development costs are capitalized under international accounting standards. And if a company wants to, and that expenditure would be sitting on the balance sheet in a company's accounts. And if they want to bring that expenditure effectively into the P&L as a revenue deduction, they can use something called Section 1308, Corporation Taxes Act 2009, to bring that across into the P&L, and then they can claim R&D expenditure on that amount. So Section 1308 was mentioned in the technical note that accompanied the announcement last week. So yes, in those circumstances, that expenditure can be included in an R&D claim, so that is taken into account for purposes of calculating the R&D intensive percentage. I guess one thing to note on that, though, the max is if a company's borderline at that 40% threshold, if they've only just exceeded it, excluding any capitalized expenditure, and then they are going to bring some capitalized expenditure from their balance sheet into their P&L. Section 138 requires that on the first hand, you include a 100% deduction for that amount in your expenditure figure to go on your return. So that increases your total expenditure figure by the amount that you're bringing across. And then you'll only be including from April 2023, 86% of that expenditure in your R&D claim. So it actually potentially dilutes and increases the margin between your R&D expenditure and your total expenditure amount. So if you're borderline, and I guess it would be quite a niche circumstance, but potentially if you're borderline, it's worth running the numbers just to see the impact on your R&D claim before and after, because the use of Section 138 is optional, it's not mandatory, and potentially you could be bringing expenditure that would otherwise all be relievable at the 27% rate down to 18.6%. So yes, cut a long story short, yes, capitalized expenditure can be included if it's intangible fixed asset expenditure. But if you're borderline, I would run numbers first before doing that. Yeah.
I think this could be a bit of a bone of contention, couldn't it? When it comes around. No, thanks. Yeah, the second question is also in relation to this intensive SME change. So yeah, I believe the change comes in from the 1st of April 2023, but you can't actually claim the higher rate of relief until the Finance Act has happened, which will probably likely be later in the year. So yeah, there'll be many claims that are able to make the R&D intensive claim between what, April and, let's say, the Finance Act is in November. So yeah, what do you suggest doing then? Is it make a claim then do an amendment, or hold off making a claim until the Finance Act? Because there's a few scenarios, aren't there?
Yeah, you're right. So you'll be accruing the benefit of the enhanced rate if you're R&D intensive from the 1st of April 2023. As you say, you can't actually claim that extra bit until next year's Finance Act is published, which is going to be later this year, possibly early next year. So you accrue it, but you can't claim it. So you can work out the financial benefit for you for planning purposes. But as you say, there'll be a delay in claiming it. What do you do in the circumstances? I think the technical note said the two options that you mentioned there. You could either delay your whole claim, or you can make one claim and then submit an amendment. Most companies will probably just carry on claiming R&D at the lower rate as normal. So usual timelines, submit your claim as normal, claim what you're entitled to at effectively 18.6%, knowing that at some future point you can do an amended claim. So there's no real issue with then doing another amended claim or a further amended claim at some future point to claim the extra bit. So I would think that would probably be in the interest of most companies to just make a future claim, after the legislation is finalised.
Yeah, it'd be interesting to see if the payment timelines are still the same for the amendments, and if it has to go through the whole review process again with HMRC. And
yeah, I think it will be a bit longer. They've said there's going to be extra checking of that R&D intensive bit, so probably better to claim what you're entitled to at the lower rate when it's due, knowing that it's probably going to be more than the 40 days that they're typically working towards currently for the R&D intensive element. So if you're claiming everything at the same time, everything's probably going to be delayed. So yeah, it probably will. They've already said that it's going to take a bit longer, basically. Yeah.
And then we've got, say, a couple of minutes left. So hopefully time for one more. So this is around the additional form. So the new way of claiming. So it says, what's the process of submitting a claim after the 1st of August with the additional form? It seems pretty uncertain at the moment. Do you suggest trying to submit a claim before the 1st of August, if possible?
So we were given a walkthrough of the previous version of the G form on the 27th of Jan. We were pretty confident that our platform will be in alignment with that form when it needs to be. Obviously, the content of that form has changed now because certain things that were previously going to be included are no longer going to be included, like the overseas costs. So things are changing. It's not required until the 1st of August 2023. I guess we're confident we'll be ready. We're not 100% confident, or we don't know. We haven't got a crystal ball to predict whether or not HMRC will be ready. It's a dramatic change. I was in HMRC when self-assessment, online self-assessment was introduced. There were a few teething issues. There potentially could be some teething issues, technical teething issues from August onwards because of such a dramatic change. So I'd say if you are anticipating making a claim August, September, October, and you can do it earlier to get that claim into HMRC before the 1st of August 2023, probably is a good idea to do it sooner rather than later. And then we'll wait and see how things go after the 1st of August 2023.
So for a claim to be submitted, the whole claim report needs to be prepared, but then the accounts need to be prepared, and so do the tax returns. So yeah, maybe a bit of upfront work earlier than usual for some companies if they want to get in before that process change on the 1st of August. So yeah, let's leave it there. There's lots of change, lots of updates, some more stuff coming in the future. We'll do another one of these webinars in the autumn with some updates on the autumn statement, but also some of the draft legislations that are ongoing in the summer. Yeah, there are a few more questions, but we'll get back to you individually on that as well. And we'll also be sharing a version or a recording of the webinar for you to have and watch whenever you want. So yeah, no, thanks for joining, and we shall see you next time.